There is a massive mega merger happening in the gold space right now. It is probably, or it is the largest gold transaction probably in the history of gold mining. $16.9 billion. Newmont is bidding for Newcrest. And we've invited a guest who can shed some more light on it because he's been in the middle of such a transaction. It's Rick Clark. He was the CEO of Redback Mining back in the day that got acquired by Kinross for $7 billion. Not 16, 7 billion, still massive. I think it's still a top 15 deal, if I'm not mistaken, in the gold mining space overall. And he's going to share some of his insights with us here. Rick, it's great to see you. Thanks for joining us.
Thanks, Kai. Thanks for inviting me.
Yeah, no, it's a pleasure because it's rare that we get to talk to somebody who's actually been involved in a billion-dollar transaction in the mining space. A, they don't happen too often, and B, there's only a few of you around who've successfully transacted. Give us your 2 cents on the transaction right now, and what do you think Newmont is up to?
Look, I think Newmont is doing something interesting in that they're looking at this as an opportunity to be the biggest. Number one, I think they're also looking at it as an opportunity to divest themselves of some assets that they would consider after this merger definitely not to be core. And that rather than doing it as Newmont now, they can do it based on this deal. I think that timing also is everything in these types of transactions. Is there a reason for the timing? And in this case, the reason is the resignation of the CEO at the end of last year. So, some could argue that Newcrest is a little bit rudderless at the moment from direction and senior management side. And Newmont's gone in and taken an opportunity of this sort of lull in Newcrest's situation, and have put in an opportune bid. And I think that, but I think what everybody has to understand is I think it's a very opportune bid. I don't see it as a great deal financially for Newcrest shareholders unless Newmont can sell on the combined entity and the potential growth of the combined company. And if, when you're looking at these type of mega mergers or big billion-dollar deals, there's 2 aspects. One, the company being acquired, its shareholders are going, fantastic, exit strategy. Let's go. This is a good deal for us. We're going to sell, and away we go. And then we'll look to diversify the money we get into other potential names. The other way to do it, or the other way, is this is a fantastic deal. We think we're going to get an extra lift as a result of getting Newmont shares going forward over a reasonable period of time that we might not otherwise get just staying as a Newcrest shareholder. So, those are the 2 things that I think a shareholder of Newcrest is looking at. Is that in the deal? Well, I think you have to look at the market and look at the trend and ask yourself, okay, let's look at Newcrest share price over the last year. Where is this bid in relation to Newcrest's pricing? And if we all believe that gold's going to go up, which, those of us in the gold business that produce gold and have produced gold in the past are all, I think, pretty bullish for 2023 going into 2024. If you're a gold, quote, bull, unquote, then is this the right deal? Or do you say, look, Newcrest, get your act together, or find a deal that's more accretive? I think, looking at the various analysts' analysis of this, everybody's going, it's moderately accretive. I don't even know if that's true. I think the problem with the banks is that these are 2 of the biggest players in the industry that potentially generate a lot of fees for the banks. So I think that everybody's going to be a little cautious of trashing this deal. And that's another thing to take into consideration when you're looking at all the analysis that's around.
Yeah, I think RBC said sentiment around the deal was negative.
Yeah.
So there was one of few that came out actually saying that, straight up. Others said, well, there's some risks involved. Others calling for a premium.
Yep.
I think even Newmont suggested that there might be a premium, which surprised me because that's terrible negotiation tactics. It's here's the price, we might go higher.
Well, I think that as of this morning, I think that, I've known Mark Bristow for a long time, and he has come out definitively saying that he is not going to weigh in on this. And I agree with his rationale. Okay. It's not about just getting bigger. unless you can show people that getting bigger is going to make them, is going to be a significant enhancement of their investment. And Mark has always been like this. He has never done a deal just to be bigger. So is he going to weigh in on this? Only if he thinks Newcrest is undervalued. And I guess that'll be the question for everybody in the market.
Yeah, that's a very good question. $16.9 billion doesn't scream like a screaming deal to me personally. Rick, you've been at the center of one of those deals. Like, tell me, like, how does it go down? Like, Mining Indaba has been going on, and I checked the speaker list, and I know Tom Palmer was there. I couldn't see Sherry Dew on there. I think Dew is their last name. Like, they're the interim CEO. So how does a deal like that go down? Do they meet up for a coffee, say, hey, we're going to put a bid on the table. Here it is. Take it or leave it?
No, I think this is friendly. I think there's lots of discussion going on just by the nature of how it's being reported and how it's coming out. Which, if I'm correct on that, puts Newcrest in a bit of a difficult position, because the latest bid by Newmont means that Newcrest, certainly at the board level or management level, seems to be on board for that. As I said, that puts them at a disadvantage, because unless then there's somebody that comes in over the top, their negotiating position to get a higher price from this point is very weak.
No, definitely as well. Like, what is it, 30% premiums max offered? That is not a bad deal, I think. So, and as you said, they've brought the deal forward to shareholders. It means on board level there must be some sort of approval, because they've rejected an earlier bid that we never heard of.
Correct. Okay, so there's a lot going on behind the scenes, but these type of deals, Kai, don't operate in the normal marketplace. Okay, when you're talking this kind of money and this kind of transaction, a lot of it is very close to the chest, and that's certainly my experience. Is that, one of the things that the players, certainly on the Redback deal, is that, everybody says we're going to do confidentiality agreements and no non-disclosure and everything. Well, when you're doing a deal like that, they're serious about that. Nobody wants anything out in the marketplace. And so the meetings take place very, carefully. They're well thought out in terms of planning. And you're out of your way to try to, show that, not let anybody show that you're even meeting. And that, I think Newmont and Newcrest has done that well. But where it goes from here, I mean, the disadvantage when you're dealing with these kind of numbers is that there's not a lot of players.
That's
like,
not a. You mentioned Barrick, and I was thinking in my head, like, who else would actually be suitable, like size wise? There's not many more. Like, who's number 3 in the world? He says Agnico is number 3. So it's Barrick or Agnico, and Barrick already said no, right? So correct. Agnico doesn't really fit their profile, in my opinion, and they're busy digesting.
I guess the only other way to look at it would be another Newcrest-sized company-ish coming in and saying, let's bolt these together as sort of a deal of equals, and let's make a much bigger company. And then they put forward a very, very credible management team that's going to run it. There's a lot of appeal to that, because that's the weight basis that you say, look, we're undervalued. This allows us to rationalize some assets, and going forward, we're going to be a much stronger, a much more economic company and deliver better results for shareholders, and thereby, everybody's going to do better. So I agree. There's not a lot of companies that could come in and just bid to take them out, but maybe there's the companies that can come in and do a different kind of transaction.
Interesting comment there. I was thinking, my mind went to Endeavour Mining, but they're probably too small. But there'd be some synergies, in my opinion, there. So,
well, look at Kinross.
Although they might, I don't know. I hear Barrick might be bidding for them at some point. I don't know. There are rumors floating around. Rick, maybe one last question. You mentioned there might be a bit of a fallout from a mega transaction like that. There might be some shedding of assets. Do you have any more insights on that? Like, what could fall out? And I know in the past, mid-tier producers have been created sort of as a collateral damage of those deals.
Yeah, look, I think that, as I said at the beginning, I think it presents an opportunity to clean house, both on, if it's a successful transaction, both in terms of non-core Newcrest assets and also non-core Barrick assets. It does create the potential for a new type of company that, spin-outs. Look, the Lundin Group, which I've been part of for 25 years, I think we're one of the experts in the industry of creating successful spin-outs. And in this transaction, Barrick could create a spin-out company that they control, and put those assets into it and let that grow on its own. So there's lots of moving parts here that could potentially add value to Barrick at the end of the day if they do it right.
Newmont is buying them.
Sorry, to Newmont. Correct.
No.
Freudian.
No, but Barrick is a shareholder of Montage Gold, which sort of brings me to sort of your venture right now. Because we've done the last interview, at least based on YouTube conversations at your last company. You sold Orca Gold recently within the last 12 months for $200 million. And this is sort of the first interview you're doing for Montage Gold, at least on camera here, probably up on YouTube from what I could find. So let's talk about that. You sold Redback for $7 billion, Orca for $200 million. Tell us a bit about Montage and what's the business plan?
Yeah, look, I mean, obviously Redback was a unique transaction, but in terms of size and value. But the business plan that we've had in the group, and as I said, Montage, Orca, Redback, we're on the fringe of the Lundin Group world. We're part of the group, but the business plan for what we were doing in Africa and gold was very different than what you're seeing in the Lundin world now. So I think it's easy to suffice it to say, Lucas Lundin, approximately 10 years ago, decided that a core for him, a big business push, was going to be legacy type assets, things that were going to provide value for his family and shareholders for decades. And hence he proceeded down that path. And that has culminated in the assets that the Lundin Group hold in Chile and Argentina as the main assets. Also, they're holding in Lundin Mining, and arguably to some degree, they're holding in Lundin Gold, which is apropos this Newcrest deal. But on the side, Lucas and I, many years ago, had a different vision for what we were doing with gold in Africa, which was effectively transactional. And one of the problems for majors, one of the problems for big investors, for institutions, is that taking a big position in a company is great. How do you get an exit? How do you realize on your investment in a reasonable time frame? When you're doing a legacy growth business plan, that's not necessarily as important because the focus is on growth, value, and dividends. When you're doing what we're doing, then you're looking for the right time to deliver an exit to shareholders where everybody's going to make a lot of money. So Redback, for example, was just that plan at the time with the market, with not only the gold market, the banking market, the political market, everything, the M&A market, all the stars aligned, and it allowed us to be, pretty selective as to when we would create that exit. So what we did is we made the decision that while we could raise this kind of money, we would continue growing those assets. And with Hugh Stewart at the helm, who was my head of exploration at the time, we knew, or we were onto something in both Ghana and in Mauritania, that we were adding ounces at an amazing rate through the drill bit. So we then looked at this and said, what's the opportune time to get out? And for Redback, as I said, the stars aligned, and we were able to get a $7 billion deal and created huge, huge value for our shareholders. Now, after that, let's look at Orca. Now, all these deals take time. I mean, these strategies, what investors have to understand is when you're doing something like this, we don't do flip deals. We only look at assets that we think are going to be mines or going to be bigger mines. If very quickly in the assessment, Kai, we decide that this is an exploration play, but the chances of this turning into something significant are, not great, we will walk away from the asset and put something else in it. We just don't continue to flog the same asset time after time after time. So we keep the vehicle. We don't abandon the vehicle, but we will eventually find an asset in there that will fit our business plan. So in this case, Orca, and let's look at it. Redback was approximately a 10-year mission, okay, and created from, let's call it 0 to 7 billion in 10 years. Orca, completely different situation in that all the stars didn't align at the time we did the transaction for Orca, that process. With Redback, we didn't have political issues, despite the fact that we were in Mauritania. Okay, there wasn't a political issue. We just had to explain to the world where, in fact, Mauritania was. With Orca, very different. We were after geological potential, exploration potential. And, it's tough in the world now as to where do you go to find new bonanza potential deposits. Really difficult. Most stories that you'll see in the market today are retreads, at least once. There's very few new discoveries that have momentum. And we assessed, coming out of Redback, we had the advantage of looking at the entire world to apply our business plan to. And our technical people, our exploration people said, look, if you're not concerned about political risk, then we'll tell you geologically where we should be. And that was in Northeast Africa and the Nubian Shield. And we had experience in the group there. We'd had projects in Eritrea. We'd had projects in the past in Sudan. Personally, I'd traveled to Sudan back in the early 80s. Lucas Lundin had been there. And so we weren't afraid of Sudan in the sense of looking at it and making a political assessment. And we did that and believed that things were changing dramatically in Sudan in terms of politics, and that if we could go in there and find something, it had to be big. Don't get me wrong, it had to be big, but if we could find something, away we go. And we did that, and very, very quickly we found something big. And we started down the path of exploration and development, and it turned into one of the best development projects in Africa, albeit in the country of Sudan. So again, that process took 10 years to realization of an exit strategy. And the reason for even the 10 years was politics, in this case, is perception of Sudan. But the asset spoke for itself. And at the end of the day, we kept pushing, and the development market or the producing market couldn't ignore us. And suddenly we had, again, a window of an opportunity where particular intermediate producers needed an asset of this size to continue growing. And at the end of the day, we were successful doing a deal with Perseus. Now, it wasn't 7 billion, as you said, it was 200 million, but there's horses for courses. And again, as I said, the stars didn't all align in this case. And we didn't have the same dynamics that we did when we did the Redback deal. But in the end, what we were looking for in this case was not a cash buyout, or effectively. We were looking to align ourselves, as I spoke earlier, in terms of what might come in on the Newcrest Newmont deal. We were looking for a company, intermediate-sized producer that needed growth, that we thought, we bring this asset together with them, their stock price is going to go up. The market's going to see this as very accretive. And that's what happened. And so my job as management was to get the best premium I could at the outset of this trend for shareholders. And I think we got an amazing premium. And then was to get stock in a company that we thought would benefit from this transaction. And that's exactly what happened. And the Perseus deal with Orca turned out to be spectacular. And I still think that Perseus has huge growth potential. They have not put out any results from the project yet, I think, but I do know that they are moving forward very, very aggressively. And I expect that we'll start hearing some results from them, both development and exploration, over the coming months. So again, good transaction. So the segue into Montage, we are looking to duplicate the success we had with Orca. Ideally, it would be awesome if we could duplicate the success we had with Redback, but we're going to need all those stars to align again, and one has to be realistic.
And but sorry to jump in. Montage was a spin-out from Orca, correct?
Yeah. So what happened is Orca owned the assets that Montage now has, the key assets. When we were negotiating with various potential purchasers, I can understand everybody wanted the CDI stuff or the Côte d'Ivoire stuff for free. They just wanted to pay for Sudan. And that was never going to happen. And that was the reason in the Lundin world that we started this whole business plan of spinouts. And we were very successful. We spun out Montage. We kept it private, did some more drilling, and then we listed it in 2020. And as a result of that and where we are today, again, we created even more value for Orca shareholders. So now we're just worried about Montage shareholders. and where we are on that, we again worked on a project called the Koné project, which was the key asset in Montage at the time. And we proceeded to continue drilling and produce a definitive feasibility study on that project that indicated it was strongly economic, lots of ounces, great operating numbers, like very, very strong economics. However, the grade was at the low end in terms of how the market perceives these kind of things. And so looking at that, we went, okay, we're not going to get the best exit for shareholders by just marketing Koné and looking for a partner or a takeout on Koné. What can we do here? And for the last 3 or 4 years, we've been looking north to our project. And to the north of our project was a joint venture by Barrick and Endeavour. And they have done about $20 million worth of work on that ground, proved up lots and lots and lots of anomalies at various levels, and defined one resource, a distinctive resource called Gabangogo. And that had 350,000 ounces of plus 2 grams. We ran our numbers, ran it through our model, and realized, wow, what an amazing impact to the project if we truck that mineralization to Koné and include it in our mine plan. So we were very keen then to try to do a deal. It took a long time. It took the involvement at very high levels, both for us and on the Endeavour and Barrick side, to get that deal done. I think without our past and without our connections, we wouldn't have got that deal done. So I think we're pretty unique in the market in being able to achieve what we've achieved. And, we were able to do the deal. We announced it early last year and closed it at the end of last year. And we have been drilling on the project ever since.
Barrick and Endeavour are both shareholders now as well, right? Like,
yeah,
what's their, like, I'm just curious motivation as well, because when you sell a project, you usually try to cash in. Like, what's their motivation?
Well, look, they two things, and I'm not going to put words in their mouth. I'll give you both what I think the thinking is from their perspective. Number one, it was a $30 million deal. We're a junior. They understood that to go out and dilute your company by $30 million in cash is pretty significant, pretty hard in a junior. Okay, so they agreed to take half in cash and half in shares. That's a very pragmatic interpretation. The other side is my personal view is I think they were quite happy holding the equity, not so much for the investment potential, okay, on the deal, because, that kind of money is meaningless to both Endeavour and Barrick. I think they wanted to keep a toe in because they recognize the upside of this project if we can, find significant higher grade on their joint venture project, which we can include in Koné. That turns Koné from, an economic project, lower grade, to a really economic project of reasonable grade or good grade. And that will now attract the whole gambit of potential partners from the majors all the way down to the intermediate producers. So for Barrick and Endeavour, this equity position in Montage keeps them at the table and close to us, and they get to sit back and watch what happens. Now, the big player is Perseus, and they inherited the Orca position in Montage, and they have about 21% of Montage, and they are doing the same thing. They've got a bigger chair at the table. They've shown themselves to be acquisitive. So, they are a serious contender in what we might do, but obviously at the end of the day, that's completely up to Perseus and Jeff Quartermain. But I think from what the market has to read in the fact, we've already as a group been successful in doing a deal with Perseus. This is Perseus, this is backyard, Côte d'Ivoire. It is the biggest project from a resource base right now in Côte d'Ivoire. And, let our role or goal here, drill like crazy, just like we did with Redback, and make this as big as we possibly can.
Drill like crazy. I don't want to get too technical. We're trying to keep it fairly high level, but what is the plan there? Like, what are the next steps? You have a DFS out. You're drilling. You just released some results. I think more are in the pipeline. So, what are some of the next steps then? And maybe
Well,
define the drill program.
yeah, look, there's 4 drills in the project right now. There's, you know, we had a great database that we inherited from Barrick, and what we're looking at is there's lots of anomalies, whether they be geochemistry, geophysics, combination. There's air core drill hole data. There's reverse circulation data, and there's some diamond drill data. What has happened on that ground is Barrick, as they do, are looking for, 5 million ounces of 2.5 plus grams. They therefore do a very broad reconnaissance analysis of projects to see if that potential exists. So most of the line spacing for analysis for Barrick is 500 meters. Okay. Well, the Gabon-Gogo project of 350,000 ounces right now sits between those lines. A lot of things fit between those lines, including a couple of million ounce, the potential for a couple of million ounces. So what Barrick, when they do that regional view, we come in and look at something completely different. We're very happy with, 500,000 ounces here, 1 million ounces here, that will add to the project and significantly enhance the economics. So that's what we're doing. We're going back and we've designed with Hugh Stewart. Hugh's an amazing guy. He's a very quiet, unassuming guy. He is one of the most successful precious metals geos explorationists, certainly for Africa. When you add what Hugh has found in terms of resources over his career, I'd say he's probably at the top of geologists in Africa. And he's looking at this now and saying, look, this requires a very systematic, disciplined exploration strategy, and that's what we're applying. And that is a combination of air core drilling, reverse circulation drilling, diamond drilling, a lot of geochemistry, a lot of geophysics, and a lot of structural geology. And the initial pass, we put out those results and showed that, what we're doing is successful. We think we're going to continue to be successful, and we think and hope we're going to be even more successful than we have been, which is going to transform this entire project. And I think what people have to recognize is that there are not a lot of projects like this. It's already, all we're doing is building on an economic project that already exists. We're not proving, we don't have to go out to the market and prove this is economic. It's already economic. What we're doing is we are upgrading this to make it much, much more attractive and irresistible for producers that need to add to their resource base and their production profile.
It's going to lead to a resource update, I guess, very soon as well. And you mentioned you have a DFS out. I'm assuming you will update that at some point as well. Do you have a rough timeline for that?
Look, we're looking to come out with a new DFS by the end of the year, and obviously we'll come up with a new resource analysis at the end of the year. Now, we may put out different resource estimates. For example, we will have drilled off the Gabon-Gogo, I would expect within the next 2 months, and we will come out with a new resource for that deposit by itself. At this stage, we won't include it in the economic analysis with Koné, and that'll happen when we put out the revised DFS.
Gotcha. You're dabbling in junior exploration. Money's usually tight. How's it looking for Montage? Like, what are the plans? Are you financed to take it to DFS?
At the end of the year, we had about $8 million in the bank, Canadian. We're drilling. We're drilling at the rate of about 1 to 1.5 million a month. You can do the math, and so we're going to have to finance. Now, we're in a very enviable position compared to a lot of our peers in that, we're at the twilight end of the careers of a lot of us in this, and we've had a lot of experience, a lot of success. So we've got a pretty good following, and the shareholder base of Montage is, as I said, is enviable. I mean, obviously we got the corporates with Perseus, with Barrick, and with Endeavour. We've got the Lundin Group, we've got Sandstorm, We've got management has about 5%. A lot of that's me. And I've participated in every financing and will participate in the next one. That's how we make money, just like shareholders. The register, if I could tell you, the register is a who's who of mining of my generation, particularly focused from the Vancouver side, but some pretty impressive people, as well as individuals from the Lundin Group who have done extremely well over the years in gold and other things. So, we can finance and have to this point financed everything pretty much ourselves. So as far as the street goes, they're not very interested in us, or haven't been very interested in us, because we don't really pay. As you know, Kai, over the last 5 years, most deals for juniors have been brought deals as opposed to bought deals. It's all smoke and mirrors. And so, I think at this stage of the game, the next financing, we will be looking to include the street a bit more, because they are helpful in terms of when you're marketing something like this asset and looking for potential partners or buyers. They can be quite useful if you ride the right horse. So at the same time, with the market, we haven't had a lot of institutional following, mainly because the institutions, again, they need an exit. They're looking at Montage and they're going, well, you got a good thing in Kone, but it's marginal on the grade. And we promised the institutions that are close to us that we were very confident we could get the Barrick Endeavour deal done, and if we did get that done, we could change that, turn that right around, which we've now done. So we're in discussions. I won't be cute. We're in discussions with a lot of institutions that I've known for a long, long time. We'd like to have certain institutions on the register going forward, and so whatever we do on financing will be dependent upon that kind of appetite and discussions along that line.
Fantastic. Sounds like you don't have any issues. You've got strong news flow coming out. Money shouldn't be a problem based on all the names you've mentioned. And unless gold drops to $900, I think you'll be absolutely fine. And I don't believe in that scenario, by the way. So just saying. Fantastic, Rick. Amazing conversation. I really, really appreciate your insights also on the Newcrest and Newmont sort of merger. And we'll be back with lots more. You mentioned lots more drill results. I'm sure I'll have Hugh back on the program here very soon as well to discuss those with us. Rick,
great.
Really appreciate your time. Thank you so much today.
Thanks very much, Kai. Nice talking to you.
Yeah, as always, and everybody else, thank you so much for tuning in. Really appreciate you, subscribing to the channel. I know 85% are you actually not subscribed. Let's change that. We hope you found the information useful on the Newmont and Newcrest acquisition. I think really valuable insights from an actual industry insider who's been working on a $7 billion transaction, been directly involved and responsible, not just involved. Like everybody's been involved in finding Oyu Tolgoi, I joke, but he's actually been directly responsible. So bit of a difference there. And yeah, subscribe, leave a comment. What do you think is going to happen? Do you think somebody else popping up to acquire Newcrest, or is the deal just going to go away? Let me know, and we'll be back with lots more. Thank you so much.